Good morning, traders. Today is May the 14th, 2021. My name is Neville Hornsey, market analyst with YouTrading, and today we're going to be looking at the euro versus the Japanese yen. All right, I just want to start with the active trader sentiment indicator. You can see here that 76% of the traders on the platform are actually bearish to the euro versus the yen. Maybe they think that the COVID situation in Europe is going to be, deflationary and the euro will drop. But considering that we've been in an uptrend since the sort of May, like a whole year, the whole year of uptrend since May 2020, these short sellers on this platform are getting absolutely squeezed. So it's, looking for where their stops might be next. First target would be September 2018 swing highs here. And then ultimately, these traders would probably puke their position above the 2018 high. And that would signal, a larger structural uptrend. So we could get a breakout, retest, and then continuation higher to then go and test, the likes of the 2014 high. If we just pull out quite a way, I'm going to take you back to 2008. So just before the great financial crash. And you can see that the highs here down to the lows of 2012, I believe. We know we've retraced through the 50%, half back before, but now we're actually trading at that level again. The sort of 132 area is 50% of that GFC decline. And, just a simple trend line from the 2014 highs through the 2018. And you can see that we've broken out of this sort of consolidation period. And if we were to ever get above 2014 highs, then, we could possibly be more bullish, even more so to the 2008 highs. If we go back to sort of present day, these, like I said, these 76% of shorts are going to get squeezed more. So I'm going to be looking for this swing high here from the September 2018 to be taken at 133. And then this here at 137 sort of spot 50 really. If we go sort of more near term, we could do an extension with the Fibonacci extension. And if I take this extension tool here, take it from the lows up to the sort of, recent sort of swing high. And then for the first corrective wave, since that big sort of corrective wave, you can see that we've been very tightly sort of ranging higher, but there hasn't been any sort of significant pullbacks like we had here from the August 2020 down to the October 2020. So this current move is very impulsive. It's definitely not corrective. And because it's impulsive, it could keep grinding higher, maybe break into this sort of further extension in the sort of trend channel. But ultimately, targets would be 1348, just above this period here into the sort of supply zone from beginning of February 2018. And then, like I said, I think the liquidity gets taken above there, and then we accelerate higher up to the 142 spot 60 and the 161.8 extension. So long term, that's where I think we're going. I think we're going a lot higher. Yes, we could get a breakout, pullback, and continuation, and then go further up. And any sort of pullbacks, I believe, will be supported, if you like, by these moving averages and maybe the Ichimoku cloud as well. You can see here that the 50 period moving average in this sort of grind higher has provided a good dynamic support. It's above the 200. It has been since the Golden Cross in June 2020. And yes, we did on this corrective move down, come down to the 200. So, if we are to find another corrective move, the 200 would be by the dip. But whilst we're in this sort of impulsive move higher, I'm looking for dynamic support from, first of all, the structure, the market structure. So these sort of swing highs, which were resistance, I want to see them act as support. If they don't act as support, I want to see the sort of balance areas here to act as support, and these indicators to also sort of indicate where buy the dip might happen. So if we just quickly look at some other pairs, the dollar versus the yen, the dollar has been appreciating year to date versus the yen. Yes, today is trading lower than yesterday's low, but you can see the market structure here is a swing low, a higher swing low, and then a higher swing high. So currently, whilst we're trading within this sort of corrective range, we might have some pullbacks and stuff, but generally the dollar is appreciating against the yen. Aussie dollar versus the yen. Aussie is also suffering against commodity prices like an iron ore demand recently, so the Aussies come down, but overall it is appreciating against the yen. So the yen is weak, and I believe if the ECB today sort of announces that they're thinking about tapering their sort of emergency asset purchase program, then this euro is going to sort of fly against the yen. Okay, that's a quick summary of where I think prices are going to go. I'm constantly thinking where I'm going to be wrong. I'm wrong if we break through these sort of moving averages and dynamic support. And I'm wrong if we break through the bottom of these rising trend channels. Okay, if you've made some money this week, try and keep hold of it. It's Friday, go into the weekend happy, and I'll catch you next week.